Hello friends, I'm sure all of you are doing fine. Let me take you through the fixed income outlook for this month. Overall, fixed income markets performed relatively well against the global headwinds. For instance, YTD UK 10-year bond yield rose 300 basis points, US by about 220, while India just moved by 100 basis points. However, let me take you through the MPC outcome which was out recently. RBI hiked repo rate by 50 basis points to 590. CRR remained unchanged. GDP growth forecast was brought down to 7% from 720, while inflation forecast for the year was retained at 670. RBI will remain focused on withdrawal of accommodation and acknowledged that the global headwinds are strong. However, our fundamentals are equally strong and the economy remained resilient. Overall, a balanced policy. As RBI remained focused on withdrawal of accommodation, hence the banking liquidity, while in surplus, will remain relatively tight. INR has been under pressure and RBI has been using the FX reserves judiciously. Overall, INR has done well. SDL and AAA bond spreads remain near recent lows, making the sovereign assets cheaper to own. RBI announced borrowing calendar for H2 and decided to skip FRBs, which addressed the supply glut for the segment. Markets were expecting government bonds to be included in the global bond indices. However, this seems to be a next year phenomena now. Given we are in a hiking cycle, yield curve has flattened and 3 to 5 year is a sweet spot now. Global situation is still fragile, and given the inverted curve in the US, it's difficult to gauge what levels Fed will stop hiking rates. Markets are discounting 4/4 to 4/2 on the terminal rate for the Fed. Consequently, it will be fair to assume 6/4 to 6/2 on the repo by March 23. Post that, we shall have a long pause. We expect flattening of the yield curve to remain the theme as shorter end of the curve inches up more than the longer end of the curve. In such a scenario, FRBs are among the best asset class to own, and given the spread at which they are trading, it becomes even more compelling. Given the scenario, as we opined in our previous outlook, as the majority of the hikes get delivered, the anxiety of the markets will reduce, which will be positive and was seen in the market post policy. Overall, carry play will remain the theme. Friends, it's time to step up the duration from liquid ultra to short and short to medium term category. Take your pick and ride the transition. Wish you all a very happy festive season ahead. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.